Presentation of stock traders. You cannot afford to overlook this stock strategy. This is one, I would say, of our most consistent strategies, but it's often overlooked because it's so quiet. It's kind of sneaky. It just sneaks up on you, and it isn't outgoing and doesn't have a lot of bells and whistles. And oftentimes it will generate signals prior to a big move when everything is really quiet, kind of in the quiet before the storm. And that's where it generates signals. So that's why I believe it's so overlooked, because many times these signals are generated when not a lot is going on. For example, I'd like you to take a look at this chart here in now NOW. This was just about, I would say 2 weeks ago, or 2 or 3 weeks ago. As you can see, the stock looks as if it's doing nothing, basically in a holding pattern, just going sideways in a range where most people would say, well, you know, this is basically resistance, right? I mean, we can't seem to get through that level. It's probably the institutions or big sellers there. I'll probably wait to see what's happening. And if it breaks through, then I'll have some more analysis to get a better idea. Well, if you were trading strategy number 8, you would have seen that actually a buy signal was generated on the 17th of January, and then another buy signal was generated on the 24th of January, and then lastly, another one, a cluster of buy signals. The last one was on the 29th of January. Now, the stock after that, being so quiet, it looked like nothing's going on even after the buy signals were generated, and then all of a sudden gapped up and had a nice 37-point run to the upside. So this is the beauty of strategy number 8, often our most overlooked strategy, but I'm going to share with you a bunch of examples, and specifically these examples are going to be on our new platform, the PTS Primo charting platform, the platform that teaches traders how to trade. So welcome once again. This is Steven Primo, president and founder of Specialist Trading. And I'm really excited to be talking about strategy number 8 today because, as I stated, it's often overlooked, but it really is a good method. It's entirely different from a lot of other techniques we do, and the fact that it's very simple, extremely simple, only uses a couple of indicators because it's an indicator-based strategy. Some of our other strategies, such as strategy number 4, is a pattern recognition strategy. This is an indicator-based strategy on its relationship between price and these certain indicators. It's extremely simple. So usually I like to give away some of the rules, but I can't do that in this one. But I'll give away one rule of one of the indicators that we use later on. So this promises to be a great presentation. Welcome once again. I've been trading for 42 years now. My career started on the floor of the Pacific Stock Exchange. I was on the floor for 16 years. 9 of those years I was a specialist. That's where we get the name Specialist Trading. If you're not familiar with what a specialist does, it's just someone who makes markets roughly in about 50 or 60 stocks. So if you wanted to buy or sell a stock, you had to go up to the trader, in other words, the floor brokers on the trading floor. You had to go up to the trader who specialized in making a market. So if you wanted to buy, let's say, IBM or Waste Management or US Air, these were 3 of the stocks that I made markets in. The broker would come up to me on behalf of his client. Let's say you had called up your broker, and then they would call up the floor broker, and then the floor broker in turn would walk up to me and say, I have 100 shares of IBM to buy or sell, and then I would make a market in that. Now, I did that during the crash of 1987 and the bull market that followed. So I've been involved in just about every environment you can think of. If you think that maybe we've gone through a tremendous volatility lately, as we did in December and January, it's nothing compared to what I've seen before and traded. If you think you've gone through quiet markets, I've gone through years of quiet markets where nothing moves. So I know what these environments are like. And plus, I've traded just about everything you can think of. You can think of something based off support and resistance, something based off Fibonacci or Elliott wave or patterns or indicators. Trust me, I've already done it before. They probably just rebranded the names. So in my 42 years of experience in trading, I know what works in terms of consistency, and I know what doesn't. So there's no need for you to waste your time, and most especially your hard-earned money, searching for that holy grail when we can tell you what works and what doesn't, and plus we can teach you how to trade so that you can be in charge of your own trading destiny. We are first and foremost an educational company. So today I'm going to share with you a lot of examples using strategy number 8. But before we begin, as always, we are first required by law to share this with you. So please take a moment to view our disclaimer. I'm going to show you a lot of performance results, a lot of charts depicting strategy number 8 signals. But please remember that we can in no way guarantee that any of the performance results I'm about to share with you will be repeated in the future. And also please remember that all examples are strictly for educational purposes only. So As we've done so many other times, if you haven't done so already, please, I invite each and every one of you to follow us on Twitter. I would suggest copying down our handle right there, abbreviation for Specialist Trading. You may want to write that down. I post different information on a daily basis. This last week, I posted some great strategy number 8 examples that have recently taken place. I also post different little bits of financial wisdom, educational wisdom. So lots of great free educational information. Please feel free to follow us on Twitter. Now, once again, as I stated in the opening statements, we're a little bit different from other webinars and the fact that we are only trying to educate you. That's our goal. Our goal is to teach you. Our goal is not to force feed you signals on a daily basis with basically taking you out of the game and telling you, no, this is what you should be buying and selling. Don't worry, I know what to do, and this is the time frame, and this is where you exit, and this is where you place your stop. To me, that would be doing you a disservice. That, in my opinion, is a recipe for a disaster. Unfortunately, that's what the entire industry is based off of. Think of it. I mean, how do you get your trading decisions? Do you go to a blog? Do you have a nightly service? Or do you go to a chat room and find out what everyone else is doing? The entire industry is based on taking individual traders out of the game so that they don't make their own trading decisions. You just simply rely on someone or something else to do it for you. Now, this sounds all great. Sure, someone's been trading for a long time and they must know what they're doing, right? They have some master system or some master plan. But if things are so great, if the entire industry is based on this and it should work, then why is it estimated that 80 to 85% of all traders fail? Well, it must be because they don't work. There's no consistency in that. And I found this out through my own experience. The only way traders become consistent is by making their own trading decisions, not relying on someone or something to tell you what to do. Now, the reason why traders don't like to make their own decisions is because they feel, well, I'm not educated enough. I didn't go to school for this. This is just a hobby of mine. I want to make some extra money. I don't have enough time to study and research. Here's the beauty of what Specialist Trading and my sister site, Pro Trader Strategies, have done. We're filling that gap for you. We supply you with this education. We tell you what to focus on and most especially what not to focus on. You see, trading is really simple. It's just the trader that overcomplicates it. Once you release all this useless noise and make things simple, trading is really easy to understand. You don't have to have a degree in business. You don't have to be trading 20 or 30 years. We have testimonials from some of our students who have never traded before, who are consistent right off the bat because they understand the process and they're making their own trading decisions. So look at, honestly, how you trade every day. Is it based on some system that you purchase that you really don't have any idea what it's based off of? We really try to educate all of our members and students around the world in over 115 countries and in basically every state in the United States. We give everyone the same basic format of the strategy, and then we work out from there. You have multiple choices for entry, you have multiple choices for exits, and you have multiple choices for stop placement. We work with you with those, and then you decide how you want to format the trade, not us, okay? This is how you become a consistent trader. So as you can see, my goal is to teach you how to trade with the Specialist Edge, the same edge that turned my trading around when I was struggling some 42 years ago. Hopefully it will be able to do the same for you. Now, since this is an educational classroom today, I want you to ask questions, but please wait till the very end of class. If you're new to my presentations, I don't like to stop for every slide the way some other presenters do because it'll take up far too much time. And oftentimes, if you wait for the next slide, your question will be answered. So if you have a question, just wait till the end. I promise I'll go through each and every one of them, as well as give you a great offer for today. All the attendees today are going to get a great discount. On top of that, there is only one question I will answer, and that's the most common, and that is this being recorded? Yes, it is. So on top of that, we will provide each and every one of you with a link to this recording. So if you have to leave early or if you have any issues with your computer and the sound, don't worry. We will send each and every one of you a link to this recording, okay? So we have a good group here today. If you happen to join us late, please wait till the end of class to ask questions. Okay, with that stated, let us begin today. Now remember, I said strategy number 8 is a little bit different from other methods in that, some of our methods have anywhere from 4 to 5, 6 rules. Strategy 8 just has really a couple of rules, and that's why I can't divulge all of them, but I will tell you about one of the indicators that we use in it, okay? So you can get a better idea of what we're looking at when we look at charts. All right, so let's talk about some of the highlights of this particular method, our most overlooked method we have at Specialist Trading. First of all, it's a stock-only strategy. This is unique in that most of our strategies can be transferred over onto any market, in any time frame and in any direction. Strategy number 8, this may be one of the reasons why it's overlooked, is only a strategy that works on stocks. In other words, you can apply it to other markets, currency pairs, commodities, futures. It just doesn't get the same results. So that's why we only stress for stock traders to use it. So this is something just for stock traders. Now, it's a stock-only strategy, and it only uses 2 indicators, and we have proprietary settings, okay? But on one of these particular indicators. But it's very simple, but you need to have these indicators, and then you need to see where price is in relation to these particular indicators. Now, here's the beauty of strategy number 8. You're going to see this a lot today in a lot of the current examples. It often, and when I say often, I didn't say guarantees, but it oftentimes will show the capability to catch some big moves. I mean, you'll see some sideways movement. You'll see a couple of strategy number 8 signals, and then a day or two later, you'll see a tremendous up move or a tremendous down move. Usually because some news was announced or something happened in the markets. And that's what strategy 8 is formatted to. It's really checking to see if something is coiling, kind of like a spring that's really been pressed together. And once you let go, it just jumps out, it coils and then it releases. That's what happens many times, not guaranteed, but many times with strategy number 8. It looks as if nothing is happening. You'll get a couple of buy signals, and then all of a sudden, you may see a large move to the upside. Now, it works best in daily bars and in higher time frames, going to daily, weekly, and monthly. You can apply it to intraday trading, as once again, it just doesn't get the same results, though. So feel free to experiment, but you will not get the same results as I have seen in my trading this for years with daily bars and weekly bars or even monthly bars. Now, obviously, the higher time frame you go out, the less signals you'll get, because, what would take maybe a couple of months of data on daily bars may take a couple of years or maybe 3 or 4 years on a monthly bar. Now, you can apply this to any direction. So if you're the type of trader that likes to go long and short, that's great. And because of the capability in sometimes capturing these large moves, you can also use it for options. So instead of actually buying the stock or buying or shorting the stock, I should say, you can buy the calls or buy the puts or use some type of spread strategy with options with an upward or downward bias. Now, as with all of our methods, you hear me say this all the time, we don't advise our students just to simply jump in. You have to paper trade. It's extremely strongly required that you paper trade first, because it's not that we're trying to, cover ourselves. It's just mainly we're trying to have you become a part of the process. And just like anything, think any sport, any career, any hobby, you have to practice first. You cannot just jump in. Think of any athlete. He can't just say, okay, I'm going to start trading, or I'm going to start playing baseball tomorrow, or I'm going to start playing basketball, or start swimming at world-class athletic prowess. You'd most likely get hurt. You hurt yourself. You're out of shape. You haven't practiced. You don't know what you're doing. It's the same way with trading. If you don't practice, if you don't rehearse a little bit prior to that, you're most likely going to lose money. And we don't want you to lose money. Even though losses are inevitable, we don't want you to lose money because you're implementing the rules incorrectly or because you don't fully understand the process. So paper trading is required in our courses. Also, our strategies are extremely consistent. But what do we mean by consistent? Someone once said, well, Steve, that means your strategies make money all the time, right? That's not what consistency means. Consistency means, firstly, that you are aware and you acknowledge the fact that you will have losses. That's okay. We're not going to sit here like some other presenters do and say, we haven't had a losing trade in 5 years. We don't believe in that. We know we have losses. But the point is, you want to have a method that's able to recoup those losses. A 2 steps forward, 1 step back approach. That's what consistency means. Consistency means looking to hit singles. Where other presenters and webinars like to go for the home runs. We don't go for that here. Now, every once in a while, we will hit a home run. And I'll show you some examples today that hit some really nice home runs. But that's not our goal. Our goal is to make you a consistent trader. And someone would say, well, why is it about consistency? Why can't I go for the home runs? Because in my 42 years, I've known tons of traders who have hit home runs. They've made hundreds of thousands, if not millions of dollars. And every one of those traders has lost it all. Because most methods that are built on searching or trying to capture those home runs have a tremendous amount of risk associated with them, which means you can easily lose that much as well. But if you have a consistent method, It means your risk is usually low and it's able to keep you in the game a long time because you're hitting singles. And that's our goal. Our goal is not to have you make hundreds of thousands of dollars one year and then give it all back. What kind of a teacher would that be if I gave you a method where you made tons of money and then you lost even more? I want you to be trading 10, 20, 30 years down the road. So that's why we promote consistency rather than going for the home runs. So losses are perfectly admissible as long as you have a method that's able to recoup those losses. Okay, with the philosophy behind us now on the highlights of strategy number 8, let's look at some examples. Now, we're going to start out by looking at buy examples, and the first rule I can give you is that if you're going to go long, price must be either closing or above the 50-period simple moving average. That's the only rule I can divulge, because if I give you the other indicator, well, then you can kind of reverse engineer it and figure out what the signals are based off of if you've been trading for a while, okay? But this is simple enough. You'll see a lot of examples now. Even if you don't see a 50-period moving average plotted, you know now that buy signals can only be generated if you are closing above or completely above the 50-period moving average. This is what we call our buy-sell line, okay? All right, so let's look at an example here in KLAC. This is going back a couple of weeks ago, middle of, or I should say end of January. Once again, it looks like it's kind of has a slight upward bias, but where most people would say, well, gosh, you know, Steve, this is overbought here. We closed near the high, and we've been steadily going up. All the oscillators, all the indicators I watch are in the overbought area, so I've got to get out of this, right? Most likely I probably want to sell it, or if I don't have it, I don't want to buy here. But guess what? Strategy number 8 generated a buy signal there. This is where most people have a difficult time with trading. They say, how can I buy here after a big move on that day? Well, a lot of times, you know, it's your fear that gets in the way, because many times there's a lot more room left in it. That's actually the beginning of a big move. And in the next week, the stock went up 10 points coming into the beginning of February. Now that's KLAC. We can look at CRON here. Here's another example of where things are quiet. It's kind of the quiet before the storm. The stock looks like it's going sideways to having a slight downward bias, but you can't see it right here, but we are above the 50-period moving average. So if we're above the 50-period moving average, I don't care how strongly the stock has been moving lower. The overall trend is still saying that you have to only look for buy setups. Don't even think of shorting it. Now, we had a strong upward day here on the 1st of January, the beginning of the year, and a buy signal was generated. Now, where people would say, well, gosh, you know, I don't know about this market. The market's been acting terrible. This stock's been going down. There's no real news on it. I don't really want to do anything. That's, once again, how most traders trade. You're relying on stuff that you've learned in a course or paid $5,000 to learn how to trade what the institutions are doing. But you're not relying on the only source that you should be, which is the chart in front of you. With these simple tools that translate what the market wants to do, a buy signal was generated here telling you that the market wants to go higher. And as you can see, it went up 13 points coming into this month, February, and it pretty much went straight up after that, okay? How about CRM, okay? Now this stock, once again, just looking off this week's action at the end of January, basically going sideways in a range, but once again, a buy signal was generated, price is above the 50-period moving average, and the stock goes up 10 points in 3 days. Could have done well with some calls on that, right? You don't have to actually buy the stock if you don't want to. Here's another stock, Facebook. Now, we all know about Facebook. We all know how terrible it's been acting. Most traders will say, gosh, you know, I tried to buy this last year when it really fell out of bed and it didn't bounce at all. I'm not going to buy it now. Well, sure, you wouldn't have bought it then because it was below the 50-period moving average. That entire time Facebook was acting terrible last year, bring up a chart on it right now. It was below the 50-period moving average. But recently, it moved above the 50-period moving average. So what does that tell us? According to strategy number 8 rule, the first rule, it says that we're only looking for buy signals. We're not even going to think of shorting it. So we had 2 buy setups, one on the 23rd of January a couple of weeks ago and one on the 29th, okay? Just about a week or so ago. And then the stock gapped up 25 points. Obviously, some news came out. This strategy does not rely on any news or any economic or fundamental information to make its decisions. So someone would say, well, how did you know that thing was going to gap up 25 points? Well, we didn't. We have no idea. We're not a predicting tool. We don't predict how high or how low something will go. We only listen to the market. That's what strategy number 8 does. And most of the times it listens to those quiet markets because it can tell when something is coiling. According to the rules of the strategy, you were above the 50, so that's telling you should only be a buy. And the other rule was telling you that the stock is actually coiling for a big move to the upside. That's not guaranteed, but as you can see here, and with other examples I'll be sharing with you, this happens a lot with strategy number 8. Here's another example, NOW. Once again, this is where we had kind of the sideways market, 3 buy signals when the market was absolutely doing nothing. And then all of a sudden, you had a big move to the upside, obviously off some news on January 30th, market up 37 points. Okay, you had potentially could have captured 37 points. Now, remember, we're not telling you that you made 37 points. You could have potentially captured that, depending on where you wanted to place your exit. You have numerous exits available within our courses. You don't have to trade this like a system where, well, I have to get out here, I have to get in here, you have a lot of different points of entry, you have a lot of different points of exits, and a lot of different points for stop placement. And someone would say, well, why do you do that? I mean, well, why don't you just tell us exactly where we're going to enter and where we're going to exit and where we're going to place our stop? Because once again, that takes you out of the game. And I would be almost assuring you that you're probably not going to be trading this time next year because you won't have any money and you'll lose, because that doesn't add to consistency. What adds to consistency is a sound basic plan, a format, which we provide you with. These are the basic rules for identifying a setup for strategy number 8. But the entry, exit, and stop are all up to you. Now, someone would say, well, Steve, I haven't been trading long enough. I don't know where to exit. I don't know where to place my stop. Well, this is what we go over with you in the course, and we give you different variables depending on what feels the most comfortable. In other words, if you're the type of trader that likes to stay in for the long haul, take as many points as profitable, we show you different exits for that. If you're the type of trader that wants to get in and out quickly, we show you exits for that. If you're the type of trader that likes as least risk as possible, we show you a stop placement for that. So that way you can ultimately decide what makes you feel comfortable. This is how you become a consistent trader, not by blindly following someone else's advice. Remember, 85% of all traders fail. Do you think there's a correlation there? All right, let's look at some sell examples. All right, now, if we were going long using strategy number 8, price had to close or be above the 50. Well, now we just do the opposite. We cannot buy if price is below the 50. We're only going to be a seller. Now, this is where a lot of traders say, well, Steve, I don't like to sell or go short. Okay, well, if something is below the 50, you don't have to. See, this is not a system. You can decide not to take the trade. Whereas systematic traders have to take every trade. That's how they can come up with their statistics and their risk-reward ratios and see how well the strategy is performing. But with our methods, there are no statistics because you're in charge. So if you don't like to go short, don't do it. You don't have to. But if you like to trade both sides of the market, well, you can either short the stock, or a lot of our traders just say, Steve, I like to buy puts. That's fine. Remember, you're in charge, not us. We're just giving you high probability setups using strategy number 8. All right, here's an example in BMRN. Once again, this last week or so, nothing much happening in the stock. It's very quiet, but I can tell you right now, since a sell signal was generated, it means that price is below the 50-period moving average. Therefore, you cannot buy it. You can only look for selling opportunities. And someone would say, well, why can't we buy below the 50? I saw a stock that went straight up one time. It was below the 50. Sure, you will see examples of that every once in a while. But if you want to be trading a month or two and then give it everything back, look for that type of buy or sell where you're out of sync with the 50-period moving average. If you want to be trading for the long haul, to have consistency, to have longevity in your trading, use this rule of only selling below the 50 and only buying, because the odds will be in your favor. Over time, you'll have more consistency. So a sell signal was generated here. It looks like the stock is doing nothing, and 13 quick points to the downside. And this was at the end of last year. Now, XOM, as we can see here, we have 2 signals that were generated. The first signal generated a small gain, 5 points to the downside. Now, you either could have taken a quick gain. Some of our students like to take a point and get out. Others like to stay in as long as possible. Let's say you had stayed into this trade. You were looking for a larger swing to the downside using one of our exit methods. Well, guess what? Another sell signal was generated in December of last year, and you could have taken advantage of saying, well, I'm short. This is going to make me feel more confident that the trade's going down because I see that we still have another sell signal being generated. Or you could have added more to your position. It's entirely up to you. Maybe bought some more puts. Either way, Now it really did fall out of bed. It fell down 12 points. If we look at MKC here, here's what we call a cluster of signals. Just the same way I believe now had a cluster of buy signals when the stock was doing nothing. Now we see MKC basically doing nothing in a range, and it has a cluster of sell signals. Now this is not quantified. There's no statistics to prove this, but when I personally have seen a cluster of signals and nothing much is happening, that to me is a high probability setup that we may be getting a big move. So this was in MKC. We had 3 sell signals, one in the beginning of January, middle, and towards the end of January, just a couple of weeks ago. And then the stock gapped down 19 points, basically off some news. Once again, we don't follow news, so I can't tell you what the reason was for this gap to the downside. The only thing we follow is what the stock is telling us. And it was screaming to us that it wanted to go lower. Now here's PFPT. Once again, the same thing. We kind of are in a range, a kind of slightly downward bias. 2 sell signals are generated. Nothing much has happened in the stock. We're below the 50-period moving average, even though you can't see it. And then we had a gap down 25 points in our favor. Once again, this happened in October of last year. Okay? This is what I mean by oftentimes. I mean, I'm not going to sit here and promise you that this happens 95% of the time. I'm not, and I'm not going to guarantee it. But I noticed many times that strategy number 8 will generate these signals before a big move much better than our other strategies, okay? It's just the way it's configured by using these 2 proprietary settings on the indicators we use and their relationship to the price. Here's another cluster in Legend, LGND. This was in the beginning to middle of January. 3 sell signals, and nothing much has happened. Now, if you're one of the students who has a very short risk parameters and doesn't like to have a lot of risk, well, you might have had a few losses here. For example, if you had taken this and let's say you put your stop right over that setup bar, well, you would have been stopped out. And if you had taken this trade, well, you would have been stopped out as well, okay? But this is what we mean by consistency. You most likely would have had 2 small losses, not a lot, but you would have lost. But if you had taken and been, vigilant and taken the last signal, well, you would have easily, if you held on long enough, made back what you lost and maybe a little more, because it was 37 points to the downside coming into the middle of this past month. So this is what we mean by consistency. You will have small losses every once in a while. Now, if you were a trader who likes to take on a lot of risk, well, maybe you wouldn't have been stopped out at all. See, this is what we mean by we're not a statistical company. There's no way we can give you facts and figures because a trader who likes very little risk, would have had different results from a trader who likes a lot of risk and would give himself more room on the stop placement. That trader most likely would not even have lost any money, where the first trader would have lost a little bit and then made it back on the last trade. So there's no way to statistically quantify every trader. We have thousands of traders around the world. We can't keep track of every trader's results. No 2 traders should ever trade alike, okay? We encourage that. So if we're encouraging hundreds of thousands of traders to trade differently, we can't keep stats on every trader. Now, let's go to some higher time frames because I know a lot of you are swing traders. You like to look at different time frames, not just daily bars. Well, let's look at a weekly bar in the spiders. This was last summer. Once again, the market is basically going sideways in the ETF that represents the S&P 500. Not much happening. We have a strong upward day where someone may say, well, we're in the middle of the summer here in June. Every time we've gone up, we kind of just fall right back down. We're in the doldrums of summer. We should just probably short this. Strategy 8 was saying the opposite, saying, no, there's most likely a big move to the upside. So you have a choice. You can either trade this. You don't have to. Remember, all trading is up to you. Or a lot of our students like to use the ETFs to give them signals on the sector. In other words, like if you're getting a signal in any of the indice ETFs, well, doesn't that mean wouldn't it basically be telling you that there's either going to be a rally or a sell-off in that particular market? So if you didn't want to trade the spiders, you had a real clear-cut signal here that most likely there's going to be a nice rally in the S&P 500. And the spiders in the next 6 or so months went up 18 points, but that was comparable to a rise of 1,500 points in just 2 months in the Dow. So this is what I mean here. You can either actually trade the ETF or you can use it as a market identification tool for a trending tool. Here's an example in Zion, Z-I-O-N, a weekly chart. Once again, a sell signal was generated, and the same rules apply even though we're looking at a weekly bar. We can only go short if we're below the 50-period moving average, which we are, and so the stock fell 10 points in the next month. XLNX on a weekly chart again. Here's a perfect example, even though we're looking at weekly bars. Once again, the stock is really doing nothing. It's in a range going back from November all the way to December of a couple of months ago. Not much happening. So why would somebody want to buy this? Well, the inner workings of this particular method a lot of times are saying that the market is coiling, getting ready for a really strong move. Not guaranteeing you, but many times we see this happening. So as you can see here, the stock went up 25 points in the next 4 weeks. Not a bad move on a weekly time frame. Here's a weekly chart in Halliburton, okay? All right, this is in September coming into October. We have a small mini cluster of 2 sell signals. Nothing much has happened. Once again, if you had taken this first signal with a very small risk amount, well, maybe you would have been stopped out. Remember, you got to get back on the horse. You can't just sit there and lick your wounds and play the trader victim card, which so many traders like to do. They say, oh, that guy doesn't know what he's talking about. This stuff doesn't work. And if you had done that, well, you have missed the second signal, which actually generated 15 points to the downside coming into the end of the year. Now, this is what we mean by consistency. You will have losses every once in a while, but you want a method that's able to recoup those losses as quickly as possible. Let's go on to a higher time frame. Let's look at MA on a monthly time frame. Here's another perfect example, a textbook example of where the stock looks as if it's doing nothing. We are basically in a holding pattern. We've been going sideways from November of 2014 to May of 2016, okay? Nothing is happening here on a monthly time frame. Why would you even consider buying this? Are you looking at the economic reports here? Are you looking at the earnings estimates? Are you looking at who the new CEO is? Or are you looking at support and resistance? We don't look at any of those things because trust me, I was looking at those things 42 years ago. They didn't work for me then, so they're not about to be working now. Remember, my job is to teach you as a mentor what to focus on, things that have consistency. And I've found in no way in 42 years is there any consistency in those things. Go back to those statistics. That's why 85% of all traders fail. Why don't we focus on the things that do have consistency? They're based off the chart, off looking at the market in front of you. Get rid of this, what my mentors called useless noise. So the chart is always telling you what it wants to do. We just have to simply listen. And that's what our job is at Specialist Trading and Pro Trader Strategies. We teach you how to listen to what the market is telling you. So it was telling us through strategy number 8 that it actually wanted to go up higher. And in January and May of 2016, 2 buy signals were generated, and you could have potentially, now I say potentially, captured 125 points to the upside, depending on how you wanted to implement your stop or your exit tracking the trade. It's entirely up to you. I'm not going to sit here and tell you you would have made 125. Possibly you did. You're in charge, not me. We just highlight a high probability setup and then let you run with it. Okay, so let's recap before we go into question and answer portion. Once again, remember, this is a stock-only strategy. I think this is another one of the reasons why we overlook it so much, because I would say 95% of all of our methods can be transferred onto any market. Now, if you want to experiment, we've had a couple of students tell us that it works pretty well with commodities, but not enough for us to go and say, hey, it works on any market. So feel free to experiment with this, but we have found the best results, as I just showed you in examples from this last month, how well it works with stocks, all right? It only uses 2 indicators. One of them I just gave to you, the 50-period moving average, all right? There are proprietary settings, and the other one is set with its relationship to price, okay? Now, it often shows the ability to catch those big moves the way I just showed you. It's kind of like the quiet before the storm. You see a lot of sideways action, and all of a sudden there's a big gap up or a gap down. Oftentimes you'll see a strategy number 8 signal was preceding those big moves, okay? Now it works best in my observance in daily bars and in higher time frames. This is what students have told us as well. You can apply it to any direction, okay, and higher time frames as well. So it's up to you if you want to be going long and short, or just long, or maybe even just short. You can also, because of these nice moves, apply options, okay? But with all of our methods, please, paper trade. That is a requirement. Most of our students lose in the beginning Not because it's a faulty method, not because it's a terrible market, but because they're implementing the rules incorrectly. They jump in way too soon before they really understand the process. Our edge is all about consistency. I just showed you numerous examples where you might have had a losing trade here or there, but how quickly you could have recouped it. That's what we promote. That's what we try and instill, because consistency is what equals longevity, okay? Longevity will keep you trading 20, 30, 40 years down the road. Not a fly-by-night system that works well 1 year when the market is going up, but when the environment changes, all of a sudden it just blows up and falls out of bed. You don't want a method like that. You want a method that has a 2-step forward, 1-step back approach, and all of our strategies and methods have that. Now remember, it shows the ability to catch big moves, so as I stated, you can apply options if you want. We're not here to tell you that you have to buy or short the stock. If you're an option trader, you can apply just by simply buying puts or calls, or you can use some type of a spread strategy if you like. Now ask yourself, before you ask me questions, do you think this strategy, this method, could have helped your trading this past year? Look at your P&L. How well did you do in 2018? Let's take it a step further. Do you think it could help your trading going forward in 2019? Well, I think I can answer that question for you. I want to offer you a great discount today, a special offer for all the attendees today. We're going to offer you strategy number 8. This is our stock trader course, instant course access, detailed video instructions, entries, exits, and stop placement. We furnish you with the add-ons for platforms for TradeStation, Metastock, MT4, Sierra Charts, NinjaTrader 7 and 8. So if you want to get those up and down automatic arrow signals, we furnish you, we give you the add-ons so you can download them onto your platform, and you'll see those when a signal is generated. But please remember, we're not here just to furnish you with up and down arrows. We want you to understand the course. That's why we have the online course, so that you fully understand why you are buying and why you are selling. We strongly feel this is the strategy you can't afford to overlook. And why do we feel that? Well, let's look at an example here that just happened this last week. Here's our textbook example again in HAE, okay? Basically, a stock going sideways. It's not doing anything. This is why most traders overlook strategy number 8, because it's so quiet, it's so sneaky. It's not outgoing and with bright lights and whistles saying you got to buy here or sell here. It's very quiet. As you can see here, the stock is really doing nothing. Someone who trades away 90% of all traders would say, well, Steve, this is really good support here. We got to buy. The institutions are buying this. That's what's keeping it up, and the volume is confirming it. This is a major Fibonacci as well as an Elliott wave support, and so I like this. In fact, the guy I watch on TV likes this too. He loves this stuff. Okay, sound familiar? This is the way 99% of all traders, myself included some 4 decades ago, this is the way you used to make decisions. And if you look at the common denominator, they're all based off what someone or something else is telling you. We're not listening to the only thing we should be listening to is the stock. What's the stock telling us? Well, most traders had never been taught how to listen to the stock. This is what we do in our courses. By using a few simple indicators, proprietary settings, and their relation to the stock would actually be telling you that there's no support here. We're actually generating a sell signal. On the 1st of February, just this past week, a sell signal was generated in HAE. 2 days later, the stock fell 15 points. Obviously, off some news, some earnings, I have no idea. You can follow news if you like, but it's not required. It's not one of the rules in the strategy. So this is what we mean by it's an overlooked strategy, because there are so many good moves happening all the time, but we seem to overlook them because it's so quiet. It's not flashy in the in a strong or outgoing market. It happens a lot of times in these very quiet markets. So we're going to offer you a great discount on the Stock Trader Strategy number 8 course. Okay. Now the course usually runs for $24.95. Don't worry, we're not going to charge you that. Here's our discount for today. We're offering you strategy number 8, the entire course, for $14.95. Now, we realize that not all of you can come up with that one lump sum, so for a limited time only, we will also have payment plans. If you want to have a small payment plan, a small deposit, Pro Trader Strategies will work with you. So if you furnish a small deposit, you can still have the course and have some type of payment plan where you pay monthly to work off the balance. So we're willing to work with you because we want to educate you. We want you to become a consistent trader. Remember, we just shown you examples that not only happened this last month or two, but happened this last week. So Trust me, stock traders, if you're a stock trader, you cannot afford to overlook this stock strategy. There are some great setups being generated, and you would love to take this course so you can learn more about it. Here's how to take advantage of this. All right, contact Pro Trader Strategies. They're my sister site that I developed all of the platform and the courses with them. They handle all of the tech support as well as the pricing model. So you can contact them by emailing them at trading@protraderstrategies.com or calling them directly at area code 310-598-6677. Now that link at the bottom will take you to the sign up page and the information page for strategy number 8. If you go to the chat box on the far right hand corner, you'll see that a live link has been posted there. So it's a lot simpler. You can simply click that on, and that link will take you exactly to that page, okay? Now, I promised that I would answer any questions. So if you have any questions, now is the time to go to the question and answer box and ask me. Now, also, I'd also like to state that, remember that link at the very bottom there, some people are asking about that. That's not a live link. So you can't just, they're saying, why isn't it working? You can't just copy, I should say, you can't just click that on. You have to copy and paste that on, okay? Questions about the add-ons. Yes, you can use these. In other words, an add-on, if you're not familiar with what an add-on is, an add-on, it simply gives you the ability to see where automatic signals have been generated. So they're learning or educational tools so that you can check your work. In other words, in the course, we teach you how to spot and identify a signal that has been generated. So you know exactly what it's based off of, and then you can look and decide if you want to take the trade or not. You can say, okay, there's too much risk, I don't want to take this, or the stock is too expensive, or it's too inexpensive. It's up to you, but we teach you what to look for. The add-ons simply provide the up and down arrow. So let's say you've been a student of mine for a week. In the course, we teach you what to look for. And let's say stock XYZ, in your opinion, what you've done in your homework and your examples, what you've seen is that there is a buy signal. Well, the way to check is to click on the add-on, and if there's a green arrow underneath that bar, well, then you've checked your work correctly, and that's basically telling you that you're in line, that you're learning how to spot those strategies correctly. We don't want to give you these simply to blindly tell you where a buy or sell signal is so that there's no work on your part. Remember, we're educators. We are not a signal service. We're not here to provide you with up and down arrows so that you blindly take them the way some other websites do. We don't believe in that. We want to educate you first and foremost. So people are asking, which are those add-ons? Okay, they are, I should say, the platforms. They are MT4, TradeStation, NinjaTrader. I believe NinjaTrader 7 and 8, but you may want to trade with Pro Trader Strategies. Sierra Charts. Did I say Metastock? Metastock as well. And I'm sure there are others that you can apply them to, but those are the major ones. Those are what I would say the majority of traders use on their platforms. And if you have any other questions about tech support or anything, it would be as easy as contacting Pro Trader Strategies. People are asking, is there a money-back guarantee? No, we don't have money-back guarantees because you learn everything. In other words, we teach you all the rules, and we've kind of been burned in the past where we have given guarantees back and people will go and sell our rules or display them online to everyone to learn from it. And that's not fair. And then we've given them a refund. So basically what we'll do is if it's not your cup of tea, even though you know all the rules, we will furnish you and substitute it for anything else available at Pro Trader Strategies that's comparable to strategy number 8, okay? So you can return it and we will substitute it with another method you may be interested in. We have tons of different strategies, upwards of 9, almost 10 different strategies. We have done different tools, different indicators, different ways to help you become consistent, okay? As we close up here, I just want to say, remember, I know I've gone to webinars myself in the past where I've looked at, presenters and these master systems and everything, and they'll show examples and they're like too good to be true. And then in the webinar, I'll look at some of the examples and I'll see that they're like 5 or 10 years old. And I'll say, wait a minute, this trade happened like 5 years ago, or this one happened 3 years ago. That's why we always want to furnish you in any of our presentations with very current examples to show you that this is happening all the time. We're not guaranteeing you that there's going to be winners all the time, but because I showed you there were losses. But we're telling you the consistency is happening over and over again. So that's all we're trying to share with you. So next time you go to a webinar, look and see some of the examples. Many times they're based off, chart signals that were generated years ago. We always want to show you things that have happened recently, such as that last one in HAE that just happened days ago. So you can't afford to overlook this strategy. This will really, in my opinion, take your trading to the next level. If you're serious about starting 2019 in the right direction, take advantage of this great offer we have. And remember, once again, you don't have to come up with $14.95 if you don't have it. You can still put down a small deposit, and the trading consultants at Pro Trader Strategies will work with you a payment plan so that you can still be up and running and getting the rules to this as early as today. One last thing I didn't mention. Yes, someone was asking about mentoring correspondence. Once you become a student of mine and you purchase a course, you are now a member of Pro Trader Strategies and Specialist Trading. So you get free educational correspondence. You have my personal email. You can contact me whenever you'd like. So this is all included in the course. I'll be there right alongside with you, trading with you. Any question, anything that doesn't make sense, you can always email me and I'll get back to you as soon as possible. Okay? So I hope you got a lot of great free information today. I hope you take advantage of this. And remember, contact Pro Trader Strategies. Any questions you may have, don't worry. There's absolutely no obligation. They would be happy to answer any question concerning platforms or concerning price or even concerning payment plans. Okay? Thank you so much for attending. I wish you the best of luck as you look at one more time at our disclaimer here. And I look forward to all of you becoming students of mine and members of the Strategy #8 course. Thank you so much. I'll see you next time. Bye-bye.